In the meantime, let's talk about how that OPEC meeting might affect the broader markets and maybe inflation as a broader level and what we've been watching. Joining us for that is Joe Terranova. He's Senior Managing Director at Virtus Investment Partners. He's also a CNBC contributor. And Jonathan Golub is Chief U.S. Equity Strategist and Head of Quantitative Research at Credit Suisse. Joe, let's start with you. OPEC, this meeting, the higher prices we've been watching for oil, what impact, if any, do you think this has on the broader market?
Good morning, Becky. I think it's problematic. OPEC Plus is way too comfortable and hesitant to increase production. We're clearly seeing demand rising very dramatically. And unfortunately, President Biden and his administration really has not extended any form of encouragement to increase production. So oil pricing moving towards the high for the year at $75. No reason to believe that that's going to pull back at any time. But it's a difficult environment because the equity investor in energy stocks really has not been able to capture the correlating performance. If you invested in Chevron in the last quarter, you're basically flat for the quarter, while the price of oil is up 20%. So this is a challenging environment and beginning to grow very problematic.
Although we did show that 4 of the top 5 performers for the first half of the year were somewhat related, oil companies somewhat related to that. Marathon was the best performer. I guess it depends on where you go and when you were getting into some of these trades.
Well, it was the beginning of the year, Becky, and a lot of the companies that are actually seeing the strong performance and did so in the first quarter, those companies are not qualitative. They're kind of debt-laden energy companies. I'm not very comfortable allocating there. I want to make sure I've got a very strong balance sheet in terms of my energy investments. And you also have to ask the question, with these debt-laden companies, why are they not selling shares? Do what GameStop or AMC is doing, take advantage of the price spike, pay down some debt. Do a secondary offering at this point.
Do you have any energy names in your portfolio, Joe?
I do. I have Suncor, which is a Canadian producer. And then I also have LNG, which is Cheniere Energy Partners. You're seeing a significant price spike in natural gas, Becky. And there's clearly, again, a significant demand-supply imbalance for LNG. A lot of the vessels that are going out and delivering the LNG, they're going to Asia, they're going to South America. That's a much longer journey than where they previously went, which was Europe. So you're taking those vessels offline, rising demand for LNG. Now you're seeing natural gas, not just oil, move higher.
Jonathan, let's talk a little bit more broadly about inflation and what it means for the market. We were talking earlier this morning. Is inflation going to be transitory, as the Fed says? And what does transitory look like? If you think of it as, something moving through the snake, is it a mouse or is it a pig that's moving through the snake?
Yeah, I think, Becky, the problem with transitory is that a month or is that a year and a half? I do agree with the Fed that all of this inflation that we're seeing is because of disruptions in reopening the economy. But if you can't get lumber and you can't get a car and you can't get labor for your restaurant, this is not going to resolve itself in the very near term. It may get a little, some of these pressures may start to alleviate over the next few months, but I think it's going to be a year or longer before we work through these supply chain problems. And until you do, we're going to have higher inflation. So I think the story here is transitory for longer. The economy is going to feel very, very overheated. That ends up being very good for stocks because companies, and we're seeing this in every sector, they're able to get pricing power. They're able to increase their prices to pass on their additional inputs. So I don't think this is a squeeze on company profitability in the near term, exactly the opposite. So this oil story, yes, it may be about OPEC, but it really is part of a much larger picture.
Shepard Smith here. Thanks for watching CNBC on YouTube.